Welcome back to the Money and Wealth Show. I'm Sterling Fox, in conversation this week with the chairman and CEO and editor-in-chief of Forbes Media. With us from New York City, Steve Forbes. Steve, in the first segment you talked about, your disillusionment with Mr. Obama. I don't imagine you were one of his biggest supporters ever, but it seems even you are surprised by how much of an ideologue he is and how much that appears to be limiting his ability to make things right with the U.S. economy.
Yeah, I had very real fears when he got elected, but I've been stunned by how just rigid he's been pushing these things through. And by contrast with, and by the way, one of the reasons I think Democrats are going to be quite willing to abandon this agenda after the elections is he's giving the impression, I'm not sure he realizes it, that he really isn't upset if they take a licking, that these Democrats are going to go down to defeat, are martyrs to the revolution, doing good things for his grand scheme for the United States of America. At Mount Rushmore, you don't find plaques talking about midterm elections for George Washington or Abraham Lincoln. They were doing great things, and so he really doesn't care. He knows he's going to have political problems, but he's got his own agenda, and it's a very whether you call it socialist or corporatist or whatever. He feels that free enterprise, free markets are bad. Government needs to dominate it, guide it. You don't have to take over industries, but they certainly can't survive without your approval. He doesn't want healthcare companies doing anything unless he gives them approval on the kind of policies they can sell. Same with the banking system. That's why this banking bill had this language that controlled even pawn shops, for crying out loud. And but again, he wants to control the finance industry.
Are you in favor? I mean, excuse me
Sure.
interrupting, but this is important because this is not as big a deal in Canada because we have a more tightly regulated banking system to begin with. But it seems that there is an audience for increased regulation in the American banking system because a lot of people go, it was that regulation-free Wild West environment that created the crash of a couple of years ago in the first place, and without reining in those cowboys, we're going to get it all over again since we've bailed them out. Now they've got a lot more money to do it all over again.
Well, the thing on the banking system, it was highly regulated. The so-called cowboys, which you saw in equity funds and hedge funds, they did not bring on this disaster. It was the banking industry that did it, the most regulated part of the U.S. financial system, which tells you something about our regulators. But the bottom line, in terms of new rules of the road, this housing bubble that we had could never have happened if the Federal Reserve hadn't printed so much money. If Fannie and Freddie had not guaranteed, with the implicit backing of the U.S. government, $1.5 trillion of junk mortgages. Those are government entities. In terms of the banking system, where the failure was not modernizing the rules of the road for things like credit default swaps. It wasn't a lack of, wasn't inadequate capital that brought on the crisis. It was with the excess money creation, capital was diverted to excess and speculation, brings out the worst in people. So yes, modernize the rules of the road on things like credit default swaps. Yes, they should go on an exchange. There should be clearing houses so we have more transparency, more open information. That's legitimate. But in terms of the massive regulations they put in, they've codified, doing the opposite of what they said. They've codified too big to fail. They're smashing community banks in the United States. There's going to be a massive consolidation of banks next year because of this bill. So again, don't look at what they say, look at what they do.
All right, well, I suppose in some way of addressing the anger that's still very much at play in the United States and to a lesser extent in Canada with those who caused the recession, if indeed it was the most regulated area of the banking sector, that I suppose then people are still angry because if indeed there was regulation that were regulations that were broken, why then haven't individuals, instead of being bailed out and rewarded with billions of dollars, been tossed in jail for breaking the rules? There don't appear to have been many consequences.
Yeah, well, there weren't that many breaking of the rules. If the regulators thought there's too much money going to housing, they could have stopped it. Our Federal Deposit Insurance Corporation has the power to go into a bank and saying, you're going too much in an area, stop it, pull back.
Right.
And they chose not to do so. So it wasn't so much breaking the rules as you could say the regulators didn't realize what was going on and didn't modernize the rules of the road. Again, that doesn't excuse human nature going berserk in Wall Street and elsewhere.
Right.
But again, if the Federal Reserve hadn't printed so much money and trashed the dollar, the juice for this housing bubble wouldn't have been there if Fannie and Freddie hadn't done their part. And then we'd made crazy regulatory mistakes, boring subjects, but devastating in their consequences, like mark-to-market accounting, which destroyed $500 billion of bank capital, not actual cash losses, but book losses. That finally was changed in early 2009, which is when our stock market finally came out of the doldrums and went up 70–80%.
You use the expression too big to fail. Do you believe that there are institutions, corporations, whatever, that literally are or should large outfits like a General Motors or Bank of America or whoever in trouble because of poor management be allowed to fail regardless of the impact on the economy? Isn't that the way capitalism's supposed to work?
Well, General Motors, we have a bankruptcy code, and they're going into a Chapter 11, what we call a bankruptcy. Wouldn't have meant the end of General Motors. Every major airline in the United States, except for American Airlines, is going through at least one reorganization.
True.
It doesn't mean you cease to exist.
Right.
You reorganize contracts and try to get back on your feet again. Downsize and hope you do it better next time. But in terms of too big to fail, what that means is not only shareholders take a hit, but creditors have to know that if they make a wrong bet, they're going to take a hit. And so with something like a bank, yes, no institution should be too big to fail. If one gets in trouble, you will save depositors. You don't want this thing to spread, but the creditors are going to take a hit. You break the institution up, you sell it off, and if people know there's real risk if you are careless, well, then you'll get more due diligence. But when people feel that at the end of the day the government's going to protect the big ones, no regulator's going to admit, oh, I was asleep at the switch,
sure.
And fess up to their own mistakes. So they'll go in and say, oh, this is too big to fail, we'll deal with it later. No, you can't have that.
Our guest this week on the Money and Wealth Show is the Chairman, CEO, and Editor-in-Chief of Forbes Media, Steve Forbes. Lots more to come, too. Please stay with us.
Hi, I'm Larry Ray, President and CEO of Gold Ray Resources Corp. Our major project is in Shandong Province, China. It's a gold project with a 43101 resource. We're currently negotiating a $16.5 million US loan to take it into production at 1,500 tons per day. For more information, go to goldray.com or phone me directly at 604-531-9639.